Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Virgin Galactic reported earnings over the past week, and there was a lot to process in this earnings report. And I don't think the market really knows what to think about it either. I'm recording this after the market closed on Friday, and the stock is about flat from where it closed a week ago. So given the pop in shares on Thursday, those kind of sold off. So a lot of confusion on what to think about this stock. I'm going to go through the numbers and then what I think about the strategy change, because there was a huge shift in the way to think about the existing spacecraft and what they're going to do with that and those operations, because that's effectively gone starting in the middle of 2024. I think that might be the right move to focus on the Delta spacecraft, but we'll go through those numbers here. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for the top 10 stocks to buy right now. And I want to just give a highlight from the quarterly numbers, and this will show a little bit what's being cut. This is from the earnings presentation. You can see that revenue was $1.7 million. Revenue at this point, not really all that meaningful for Virgin Galactic, just because there's only 4 seats that they could even possibly generate revenue from, and that spacecraft is only flying once a month. So that's the context which to think about that. But there was a lot of expenses that went into that spacecraft and getting it off the ground. $26 million. One of the reasons that they broke this out is this is what management said is going to be cut. So there's basically 2 big expense buckets for the business: running the current operations and getting people into space, maintaining the spacecraft. And then the other is developing the new spacecraft. That would be the Delta class spacecraft. And what management basically decided this quarter is said, we're going to get rid of as much cost as possible on that spaceline operations side and focus all of the capital that we have left on building out that Delta spacecraft. I think that's probably the right move for survival long term, and we'll get to the cash situation. But that was the big decision. That's the layoffs that are happening or coming to Virgin Galactic, and that's why they broke out this $26 million. So they only burned $105 million in free cash flow. That was much lower than expected. And then you can see that if they cut this expense as well, you could really pull those expenses down pretty significantly. And then management talked on the conference call about some of these R&D costs. Are they going to be capitalized, built into those new spacecraft? You move from R&D expenses to actually expenses building out spacecraft. So those become capital expenses. So it'll be accounted for a little bit differently. There will still be cash used to pay those employees. But the other notable thing here, raised $211 million in gross proceeds from selling 62 million shares of stock. That means they were selling the stock above $3 per share. So if you're a shareholder in the stock currently, it means they actually did a pretty good job allocating the capital, at least on a short-term basis. There was a $1.1 billion in cash left on the balance sheet at the end of the quarter. And management, at least, is illustrating the cash position going forward. But they said that there's enough cash on the balance sheet to get to free cash flow positive. I have run the numbers on how much it costs to build the new spacecraft, $50 to $60 million, how many they'll need to get to free cash flow positive, what their current operating expenses are. I think this is going to be a stretch, but that's at least the goal that they have set out for in 2026. So what will happen here is in 2024 and 2025, there will be very little revenue coming in from flights, but their spending is going to go down. 2-year average spending is expected to be less than in 2023. 2023, they're on about a $500 million run rate. That's how you get to the point where you can get to the end of 2025 and still have some cash left over. The challenge is now you've got to ramp up your operations. So what they're saying is that they could get to free cash flow positive with just 2 spacecraft operating. This is how they get to those unit economics. The 4th generation class has 6 seats. The price per seat is about $400,000 or $600,000 if it's a research flight. So that gets you to somewhere around $3 million in revenue per flight. They're now saying that these can fly 8 times per month. I think their last projection on this was once per week, which would be about 4 times a month. So I believe that this has doubled. And now they're saying, and the margin is going to be relatively high because I believe the operating cost is only going to be about $400,000 per flight. So the margin per flight is going to be over $2 million. That means that the potential margin per month per ship is going to be around $15 million. That's how you could potentially get to free cash flow positive with just two ships. The problem is you've got to get to the point where these are actually developed. We have not actually launched these yet. You need to get through that entire testing phase, and you need to ramp up your operations to actually do this 8 times a month with two ships, which would be 16 flights per month. So to me, the big takeaway here is we at least know the path forward. It's going to be a difficult path forward, and that's maybe one of the reasons that the jump in the stock didn't stick. But the idea is to just cut all expenses to the bone so that you just are focusing on delivering that Delta class spacecraft. The testing on that spacecraft will begin next year, and then validation will be in 2025 with commercial operations starting sometime in 2026. Management kind of dodged that question, when would they be launching in 2026? Because that really matters. You can just go through even the high level numbers and see that you start to run out of cash at the end of 2025. So management says they can get to free cash flow positive, but it's definitely going to be a stretch. What we at least have is a bar to look at to see how they could get to that point. And so now we get to the point where every test flight is going to be critical, and we kind of go into a little bit of a dark period for Virgin Galactic again. They're going to have another flight in January, but the flights for the current Unity spacecraft are going to be done mid-2024, and then they're going to retire that spacecraft. That's how you cut those operating expenses from those operations. So that's going to save the company a lot of money, but then you put a ton of pressure on trying to get Delta off the ground. So I think sometime in the next 2 years, Virgin Galactic is going to have to raise more money. It's just going to be extremely tight getting to the point where those spacecraft are going to be operational. But the good news is, if you get through all your test flights and you get closer to being that free cash flow positive, generating $25 to $50 million per month if you have two ships, that maybe opens up some financing opportunities. So I think this is basically management's plan. They're kicking the financing ball down the road instead of trying to raise money now with a relatively low stock price. Probably don't have a lot of options in the debt markets. I talked about these in previous videos, that they're just running out of ways to raise money. And so you just kick that can down the road, cut your costs as much as you can, focus on the Delta spacecraft and the $1.1 billion you do have. Try to get to the finish line with Delta and maybe figure out some financing options when you get closer to launch there. And that's going to be at least 2 years away. So this is, again, a stock that I own. I think there's a lot of potential, but I have called this a 0x or 100x stock. I think that really holds right now. If they're able to pull this off and don't even have to raise more capital, this is going to be a phenomenal investment. But it is also possible, as we have seen in the past, that there are delays with the Delta spacecraft. In fact, I would be shocked if there are not delays, because that's just what happens with these kind of developments. And if there are delays, the company is really running a tightrope. So keep an eye on that cash, keep an eye on the cash burn. And if the stock does go up, I could see them using it as a way to finance operations, give them a little bit more leeway. So that's what I took from the quarter. A lot of moving parts, and we don't hear from Virgin Galactic all that often. So unless we hear more in the next 3 months, we'll have to get another update at the end of the fourth quarter to see how things are going from a development perspective, because we haven't even started testing with that Delta spacecraft. So what do you think of the results? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.